Hello everyone, my name is Alex. I'm a real estate agent in the East Side, and today we have our guest. She's a CPA, Alexandra Litmanovich. Today we'll be talking about bookkeeping, accounting, and tax preparation. Hello, Alexandra. Please introduce yourself, and can you please tell us about what's the difference between these three and why a business owner should understand these differences?
Hello, Alex. Hello, everyone. My name is Alexandra Litmanovich. I'm the owner of a small tax practice called Tax Services LLC. And I've been providing various tax and accounting services for over 15 years. You mentioned three different functions, I would say so, like bookkeeping, accounting, tax preparation, and sometimes it's very difficult to know for individuals and business owners to know what they need, what help they need. So I will just tell a few words about each functions. They are all related, but each of them serves a distinct purpose and requires a specific set of knowledge, experience. So bookkeeping is just the process of recording transactions, such as payments, sales, receipts, whatever. It can be applicable both to individuals and business owners in more extent, but the IRS doesn't have any specific requirement to use the software or use a paper notebook or spreadsheet, Excel spreadsheet to track all your transactions. And bookkeepers usually use a specific software that help them categorize and generate financial statements. The formal education for bookkeepers is not required, but I would recommend to seek for a professional bookkeeper, experienced bookkeeper, because this step is the very first step in your financial processes and it's very important. Bookkeeper must not only know how to categorize transactions, it's pretty easy, relatively easy, I would say. He must know what business expenses can be deductible, can be applicable, are reasonable and necessary for the business, and which are not. Bookkeepers should be able to read financial statements, to be able to correct mistakes on time. Bookkeepers must know at least something about different tax structures and the associated laws and regulations, because based on my experience, the issues I dealt with is when, for example, a business owner changes the tax structure, the bookkeeper doesn't change anything in the way he do the books. And that led to a lot of deduction losses, potential real deduction losses. So the business owners could not deduct all the expenses just because they did it incorrectly. So bookkeeper should know about that stuff. Besides, when accountant and tax preparers work with the financial statements, they do not look inside of them. Yeah, they just see the totals. So if there is any mistakes, some mistakes are obvious, but some are not, well, they will give you a tax advice based on the incorrect financial information. So be careful when you choose a bookkeeper. I do recommend to have an experienced one.
Oh yeah, that's very true. And I think that it's very important to have a good bookkeeper, or even if for us like small business owners, if we want to set up like a system, can you please tell us some basic tasks, or maybe like how to set up a system, like to introduce, like all these data and maybe some kind of software, or we just use like regular spreadsheets?
Well, I usually recommend estimate the level of the number of transactions, the number of accounts, business account that you're going to use. If you just start, you probably won't have a lot of transactions. So Excel spreadsheets will work. You just summarize your profits separately and categorized monthly, probably, all the transactions like office expenses, supplies, contractors, whatever you have, and just summarize monthly so that by the end of the year you are ready with the totals. That will give you a sort of profit and loss that you can use as well to analyze. For example, you pay too much to your contractors, or you pay too much for the supplies. Maybe you need to do something about that, or you get a high profit this year, maybe you need to do something during the year to optimize the taxes. So tracking your income and basic expenses is very, very, very helpful, just to see where you are, even if you just start a business. And sometimes business owners or just individuals, business owners more, pay a lot of using for the expenses, use their personal cards and forget about those expenses by the end of the year. So if you track that part as well, that will be very helpful. You won't lose any deductions there.
Okay, yeah, that makes perfect sense, because like all these small business owners, some of them, they may not know how to track all these expenses, right? And it's very important to talk to somebody who know and explain. So that's exactly what I do with my tax preparer. So before I start the year or before I start a new business, I'll just sit and I'll ask, can you just give me like the list of all the expenses I can deduct, like on my business activity? Because it could be different, if it's a contracting business and then I have like real estate business, so we'll have different expenses, right? So we have to categorize them differently, and there is stuff which can be deducted and there is stuff which cannot be deducted, right? So this is one thing. Can you please tell us what exactly an accountant will do that a bookkeeper doesn't?
Accounting services is just like a next step. It involves summarizing, analyzing, interpreting of the financial information that's provided by the business owner. Sometimes not only business owner, individuals as well. So accountants use financial statements such as income statement of profit and loss, balance sheet, cash flow statements. There might be some others to see the overall financial health of the business. They can help when they see those financial statements. They can see if they can help you with tax strategies. They can help you with budgeting. They can help you with financial planning. For example, a business owner or individual wants to make a significant purchase and he wants to know how it will affect the taxes, for example. Or if a lot of taxpayers just during the year request to estimate their tax liability for the year, so that they can get ready and maybe make some optimization. So accountants do help you to make informative decisions about your operations, about your financial situations during the year. Not when the year is over and you basically can do, there is little things that you can do, but during the year. Okay. So this is the role of an accountant.
Just to paraphrase, so my understanding, like a bookkeeper is just a person who will just introduce all the data, will just track all the expenses, all the income, all the, like whatever the activity of the company is. And then the accountant is more as an advisor, as a tax advisor. So maybe as a financial advisor as well, because when you want, as you just mentioned, when you want to buy something, so you basically talk to your accountant, right? Does it make sense to buy now or maybe next year? Maybe we should buy more this year. For instance, if I have my real estate business where I help people to buy or sell real estate, so I have a lot of income from there, and how I can offset that income, I can just buy more properties, and the depreciation used from the properties, I can offset my income. And basically, if I'm planning to make a certain amount this year by selling real estate, so I can plan how much real estate I can buy to offset the most of my income, if I can offset or not. Is that correct?
Yes, you just gave a very good summary. It's financial and tax advice.
And yeah, that's what I mean.
Tax advice. So two types of services that you can provide, that an accountant can provide.
Okay, yes. Yeah, that's very good, like explanation. And who is the tax preparer? Is that an accountant who files the taxes for individuals and businesses, or who is that person?
Yeah, as you know, tax preparation is the calculating and filing tax returns on behalf of individuals and small business owners or just business owners. So tax preparers are are responsible for tax deductions, tax credit, maybe exemptions. They need to be up to date on all the tax laws and regulations, any changes. So they need to make sure that the taxpayer stays compliant by filing the tax return. Some individuals can prepare their tax return themselves if it's not too much complicated, like W2 income, interest income, something like that. IRS has the resources, there are paid software, so that can be used. But if you have a more complicated tax situation, for example, you sold a house, or you've got a rental activity, or you've got a business, sole proprietorship, or you've got some specific stock sales, for example, or if you have a business, I do recommend to hire a professional, because tax laws and regulations, they change very often, and they like to change it in the very end of the year. So you need to stay up to date, not to miss anything, not to overestimate or underestimate your taxes. So if you have a more complicated situation, I would recommend to hire a tax professional.
Can you give us some tips, like how to prepare for taxes? Should we pay them quarterly? Should we file them somehow like during the year? Should we set aside some money for the taxes from our business and not get overwhelmed when the tax bill is coming due? Can you give us like a few tips that we can keep in mind during the year before the tax season comes?
Yeah, the first step, whether you are an individual or business owner, I do recommend to understand your previous year tax return. If you do not understand it, you cannot plan. You cannot just think ahead. You need to know where the tax came from. And if you don't know, just ask to explain. That's very important. If you know that you can plan and you can talk to a consultant about any possible ways to optimize the tax if the situation stays the same. I do recommend, if you are a business owner, to consult every 6 months. I mean, just in the middle of the year and closer to the end of the year, not in the very end, obviously, so that you have enough time to do something. Just provide the financial statements to a consultant, to an accountant, so that he can check what you have, where you are. The most responsible taxpayers, they usually ask to review their financial situations during the year and see where they are in terms of tax prepayment, because it's much more easier to prepay during the year little by little than to pay, for example, an enormous amount when you file your tax return. And there is law which I would say most taxpayers do not follow. If your tax liability for the year is $1,000 or more, you are required to prepay the tax for the next year in 4 payments. There are estimated tax payment vouchers. It's called Form 1040-ES. So each voucher has its due date. It's in April, July, September, and January of the next year, if I'm not mistaken. So you are supposed to prepay during the year I'm not talking about taxpayers with a very high level of income, but regular taxpayers are required to prepay whether 100% of the previous tax year or 90% of the current tax year. So obviously you don't know how much someone knows, but if you don't know how much you will be paying this year, make sure you prepay 100% of the tax from the previous year.
Okay, what's going to happen if we do not prepay them in advance?
Penalties.
Okay.
Estimated tax penalties. I believe it's about 8% right now. I might be mistaken again. I do not follow that well the rates, they change. It's about that amount.
Okay, how those business owners can stay like organized with those, like tax documents, what they have to keep in their records? Should be like bank statements, should be receipts, or what exactly they should have on their records? And can you tell us also some of the common pitfalls that they can avoid by doing all this like during the year?
Well, the main thing, you need to remember that bank statements for business owners, are not sufficient, are not the right supporting document to support your expenses. So you need to keep all receipts. So you can keep them like paper receipts, or you can scan them with there are different apps that can be used, or just scan and save in Dropbox or something like that. But you need to make sure that you can support every single expense on your tax return with a receipt.
So bank statements won't be enough. So basically we have to have something more official, which is like a receipt or invoice from a different company where the expense were paid for.
I wanted to mention one more thing. When you choose a specialist, it's clear you follow the same steps like credentials, experience, maybe reviews. For tax return preparers, it's very important to check if your tax return preparer is registered with the IRS. I just had too many tax returns prepared by tax preparers who do not sign tax return and make a lot of mistakes. Make sure that the tax return preparer you choose is registered with the IRS. It can be checked online on their website. Registration can be different. It may be just regular tax return preparer, registered tax return preparer. It may be, for example, enrolled agent. It's a more complicated level for specialists that can deal with audits, for example, that can represent you. But any type of registrations will guarantee you some sort of you can trust them, because registered tax return preparers are required to be in compliance with law. each single year. And all registered tax return preparers are required to pass a certain amount of educational credit each year to support their certification. So that just guarantees that your tax return preparer can help you to stay in compliance. And make sure that your tax return preparer signs your tax return, takes responsibility for his work or her work.
Okay, so if the tax return is not signed by my CPA, so that means that the CPA does not have any liability. They don't have any responsibility on that tax report, right?
Yeah.
Okay, so basically everything falls on us as a filer. Okay, yeah, that makes sense. Follow-up question I have to you. So we just talked about saving all these receipts and all that. So how often we should expect an audit from the IRS, or how soon if I just establish my business?
Yeah, audits do not start less than in 3 years after you filed your tax return or paid the tax. So that's why it's very important to do everything on time. So if you work with your tax return for 2023, make sure you all the information, save it somewhere and have it somewhere, because in 3 years you won't remember what you did. You won't remember why you took this or that decision. So make sure that everything related to your tax preparation is saved somewhere, and you can get back to it in 3 years if you get audited. Well, audits are just a separate topic to discuss probably, but I just tell you a few words. If your tax return doesn't make sense in terms of like average characteristics for your type of activity, it will get by the computer. It will be just choose your tax return because it does not fall within the average characteristics, within average numbers for your type of business. For example, if you provide massage services and your office expenses are $16,000, that's a real case I dealt with. So you will be audited. All the expenses should be reasonable and necessary for your business, not overstated, and reported correctly. You cannot report an equipment, you cannot expense an equipment that you bought. You need to depreciate it. Yeah. So again, bookkeeper should know about that, and she should prepare financial statements.
And you just mentioned that in 3 years we may get audited. How long we should keep all the records? 3 years or more?
I think it's 5 years or something like that.
Can you tell us, please, as a new business owner, I know like we have a lot of expenses in the beginning. What would you recommend? Hiring a bookkeeper, doing by ourselves, or hiring an accountant?
If you can track everything accurately, you don't need a bookkeeper. Because startup businesses do not, in the majority, we are talking about small business owners. They do have expenses, definitely, but they are not enormous, I would say, or there is no a great number of transactions on the bank statements. Just if you can track it on time and consistently, you don't need a bookkeeper. You just categorize everything by type of expense. When the tax return preparer works with your statements, with your notes, he will ask additional questions if something is off or if something is not clear. You don't need a bookkeeper if you just start a business. You might need a consultation before you start your business, because there can be some specific moments that can help you to avoid loss of potential deductions. You might need it. I do recommend it. But if you just start a business and you got your consultation, you can ask questions about categorization there, and you can do it yourself. If you don't have time, then hire a bookkeeper.
Yeah, that makes sense. That makes perfect sense. All right, thank you very much. That was it for today. We had Alexandra Litmanovich with questions answering to our clients, and some of the questions came from our clients as well. And that was the basics for bookkeeping, accounting, and tax preparer. And for the next episodes, we'll have more of these questions answered, and we'll have Alexandra Litmanovich back. And if you have any questions in the meantime, you can reach out directly to her. All the information is listed below the video. Feel free to reach out, and she's going to help you on that. Thank you very much, Alexandra. I really appreciate your time, and have a wonderful day.
Thank you for inviting me. Have a wonderful day too. Bye.
Thanks. Bye-bye.